I think it has changed quite a bit. When you look at the banking side, I think they have a strong appetite to do leverage finance. We see them offering, quite aggressive conditions. When you look at the leverage multiples today, they're close to those prevailing at the peak of the market in like 2007. We have seen in the Swiss market, even for small deals, EBITDA multiple north of 4 times. And for larger deals, all the way up to 6 times. I think that shows how much liquidity is in the market. And of course, the interests are still at a very low level. Well, for me, unfortunately, it's more refinancing than buyouts. I think M&A volume is still down this year. I think the first half was about a quarter down compared to last year. And the private equity funds are mainly using it to refinance. But when you look at the dry powder in private equity funds, I think there's still a lot of money there that needs to be invested. They also have a lot of portfolio companies which need to be sold. So I'm rather confident that this will turn into a M&A deal flow as well in next year. I think it's still the confidence into the economic outlook. I mean, of course, we are hearing in the newspapers that it's getting better. There's early signs that showing a recovery. But then, a lot of private equity still have portfolio companies which are struggling. Then there's also the critical voices that are saying, the real problems haven't been solved. So I think confidence is not quite back yet. And the outlook of the corporates is not really predictable yet. I think that's what's holding us back. Like typical in capital markets, when the confidence is there again, then everybody seems to have it kind of overnight. So when this, when it's really coming, it's difficult to say. I mean, we're seeing, quite some progress in the economy in the US, and there is positive signs in Europe. And I think if there's no further turbulence, I hope that we're going to see the recovery in 2014.